Welcome to Community Crypto on CoinDesk TV. Host Isaiah Jackson, and this week we are discussing Bitcoin for boomers, how you can use cryptocurrency in your retirement plan, and a quick reminder that CoinDesk is a news organization and this is not financial advice. I am joined today with Tyrone Ross, CEO of Onramp Invest. Welcome to the show, brother.
Thank you so much for having me. I got my cocoa butter lathered on. I'm ready to roll. Let's rock.
Likewise, brother, me too. So let's jump right into it. First, tell us a little bit about Onramp Invest and some of the services that you offer in the crypto industry.
Yeah, appreciate that. So Onramp is building the technology to allow financial advisors to build portfolios with Bitcoin and other crypto assets for their clients. And, right in line with this conversation, what we want to allow advisors to do, if a client was to walk in and actually tell the advisor, hey, I want to add a 5% allocation to my portfolio, give the advisor the tools and the technology to do that. And we also have Onramp Academy, which is a place where advisors can go and get educated on all things crypto.
Oh, yeah, absolutely. And you need both sides of that, right? You need the education portion as much as you need the actual allocation so people know what they're actually investing in, right? So, Bitcoin and cryptocurrency is usually seen as, a young person's game. All the statistics point towards younger people using it, younger people buying it. But why is it important for the older generation, our boomers, some of the people closer to retirement? Why is it important for them to learn about crypto as well?
So you have this narrative now that Bitcoin is digital gold, if you will, right? And it's hard to tell a boomer, oh, we're going to rotate out of this internet money and go into this internet money, where if you create a narrative around Bitcoin being similar to gold and some of the reasons, boomers would hold gold, an inflation hedge, store value, so on and so forth, you can, go that route with exchanging that with Bitcoin. Also, low rate environment, bonds aren't doing much. You look at the lift that Bitcoin can add to a portfolio. If I'm 55 and my financial plan says I'm going to live another 30, 40 years, you may start to look at Bitcoin for some of that capital appreciation, which you need in a portfolio.
Right. And that points to the savings part of Bitcoin. It long term as a savings account or as a store of value, much like gold, is a great way for boomers to sort of get it in their mind what Bitcoin is used for. But real quick, I want to play a recent clip from Gary Gensler, head of the SEC, talking about how the younger generation could save for retirement.
What I want to talk about is savings. Start saving early and save often. I know it sounds a little odd. You're still in college, but just for a moment, if you were to save $5 a week and you earned maybe 8%, starting off while you're at college, you may have $130,000 plus saved by the time of retirement at 65.
So, Tyrone, I want to get your reaction to that. What do you think as far as Gary Gensler's plan of saving $5 a week? Do you think this is a good plan, or do you think he is sort of ignoring the best savings vehicle there is?
Mr. Gensler thinks it's 1995. I get it, but compounding interest and the rule of 72, we get all of that, but it's a new world, Gary, right? It's hard to tell, millennials that and Gen X, right? It's hard to tell those folks you get 8% when they can get, 20%, they get, 50% on some things. So that's a tough pitch to this new audience, but I get it, right? He's pitching savings and they're trying to move folks away from all of this software and code that is changing the world. But yeah, man, it's not 1921, it's 2021.
Exactly. Yeah. And I think that his message is something that is safe. It's very conservative. It doesn't really rock the boat. But as soon as you bring up the fact that Bitcoin's compound annual growth is 200%, it kind of gets rid of the whole argument of 8%. What is that? So for younger people,
and again, the principles of it make sense, right? To save and do all that other stuff. But take that $5 a day and put it into Bitcoin, right? But I get what they're trying to do there, and the SEC is investor protections and do it the right way. But it's a new world, right? And those returns and that way of doing it it's not going to fly anymore.
Oh yeah, absolutely. And do you think that this saving strategy is feasible for the younger generation, but in crypto instead? Do you think they could do something similar, maybe $5 a week in crypto or something similar? Do you think that's feasible for the younger generation?
Yeah, you and I both know that is absolutely possible. There's a lot of retail apps out there that make that possible. I have clients that have done it and have seen their gains and their crypto portfolios explode. Sure. Is it for everyone? No. Is it for select few? Absolutely. And the tools are there to be able to do it, to make it very simple, whether it's a Cash App or Swan Bitcoin or whatever it is that you want to use, dollar cost averaging, taking a little bit of your earnings, putting that into Bitcoin is prudent, right? If you have a long-term time horizon, which if you're 20, 30, 40, you do, if you understand the technology, if you're a digital native and you got a phone in your pocket, right? Why would you do that as opposed to walking in the Bank of America, dealing with bad customer service, them cost, it's costing you whatever, and having to go through a labyrinth of paperwork? Just, again, new world.
Oh, yeah. I always say one day our kids are going to laugh at us for walking into banks with a paper check to ask for our own money.
That's crazy. I feel goofy now walking to the ATM still. I'm like, why am I doing this? Yeah. Like, I don't do it often, but when I do, I'm like, why am I going to the ATM? This is crazy.
Oh, man. Yeah, it's a new day. And definitely the digital era is upon us. And, one of the things about the digital era is that it seems scary for some of the older generation, because if they're just getting used to phones and the internet and Wi-Fi, and then you throw on the fact that, now we have digital money, it can be a little scary. But I wanted to ask you, when you speak to people who are older, who are in the boomer generation, what are some of the concerns they have about investing in something like Bitcoin or cryptocurrencies in general?
No intrinsic value, right? You've heard these, right? No intrinsic value. It's volatile, right? They can print more, right? They can make more. It's 21 million, but anyone could just run this stuff and make more, right? And lastly is the security, right? How do I store it? How do I keep it? How do I use it? So valid concerns, perhaps, right? And yes to some of those, but what you realize is how that generation came to accumulate their wealth is different. How the millennials have, accumulating their wealth. So it's just, my parents, and again, I'm a bad proxy. I grew up in a home that was unbanked and we didn't have accounts and all that. But my mother still goes and uses money orders, like to this day, because that's all she knows. So she won't even use the bank. She still uses money orders. Now I did get her to download Cash App though. So, but imagine trying to get those folks to use Bitcoin, right? Or use Casa or something like that. It's a long way off, but I think those concerns are, what they see as being issues, and that we need to address those of us that have the platform to get them to understand it's easier than you think.
Oh yeah. And let's break down some of those problems that you said, some of those concerns. Like you first said, no intrinsic value. Could you tell us a little bit about why Bitcoin and cryptocurrencies do have intrinsic value? And then we'll move on to some of the other concerns to try and break those down for our viewers so they can see, hey, it's not as bad as you think. So why does Bitcoin have intrinsic value? Why should someone own it?
Right. So this is the thing with that, no intrinsic value. And it's funny, like you could say that with so many traditional assets as well, but it's just they hang on to this, no discounted cash flows. At least if I buy McDonald's, I know there's going to be a stream of income. So the intrinsic value part, that value comes from the network, looking at the number of users, looking at the accessibility of it and all, its reach and scope globally, the amount of money that it settles, all of these different metrics, right? Our chief innovation officer, shout to Akeem Sawyer, said, on-chain analytics are the new 13F. And it's the truth. If you look at an auditable blockchain that you can look at what's going on, all of the information, all of the data is there. You have to take off that old lens to look at a new asset class that has to be gauged in a different manner, right? And network effects and Metcalfe's law and all these different things. So yes, there's value there. You just have to use different metrics in order to attain it.
Absolutely. And I want to jump into the second one. You said volatility. I hear this all the time. I don't think I've talked to a person older than myself who hasn't mentioned volatility when you bring up Bitcoin. So can we sort of debunk that, the volatility of Bitcoin? Is it too volatile, or is the volatility actually good?
So again, I think that's, if you're a trader, volatility is good. If you are young and understand that it's a young asset class and it's less volatile than it was at $300, absolutely. Mm-hmm. Now, financial advisors talk about the volatility, and I tell advisors all the time, is it too volatile for you or too volatile for the client? Right? And you got to ask the client that. That's not your decision. If it's too volatile for you, so be it. And then advisors go, well, I don't want to allocate 2% for it to be 110% of the headaches that I deal with. Well, if you profile your client right, my clients never complained about it being down 30, 40%. When I was at Merrill Lynch and the stock market was down 5%, oh, the phone would ring off the hook. And we just did a podcast with Josh Brown and JC Peretz and all that. We were talking about, time adjusted, right? How crypto markets are open every day, all day. And if you look at the compressed, amount of time that stocks trade, small caps, micro cap stocks, you put them side by side, it's easy to see the volatility. And Bitcoin isn't what everyone makes it out to be. Is it more volatile? Sure. But for right now, again, it's 13 years old. What isn't volatile at 13? Right? It will become less volatile. But right now, look at that as an opportunity as opposed to an excuse not to get in.
Oh, yeah. Yeah. And I mean, Bitcoin is a teenager, basically. Like we're 13 years old. So yes, of course, there's going to be some points, just like whenever you see teenagers today where you're like, what is going on with these kids? But you understand it's the future. So you still do what you have to do to grow it and nurture that network. So glad you mentioned that. And one of the things going on right now is we have had COVID, the pandemic, the last year or so. We've seen inflation rates are set to rise. What impact does the fiscal and monetary policies coming down the pipe, what do they have, or what impact do they have on retirement and the Bitcoin community as a whole?
I think there's a couple of things going on here, right? I think we've already seen inflation starting to rocket a bit. You're seeing the unemployment rate and just those that are searching for jobs change. You're looking at an environment where inequality has exploded during COVID because those who owned assets have done extremely well. Right. So this is an environment where continuing to hold assets and the right assets in a time of rising inflation makes a ton of sense. Right. Like banks. Well, what are all the banks doing now? They're poking around Bitcoin. Right. So, there's a couple of ways to play this. If you are an investor and you look at what's going on macroeconomically, what benefits when rates rise. Right. So there's the housing market, all of these different things. But for owning, and for me, I think this is the one thing that we need to see with Bitcoin, right? Again, only being around 13 years. How does it perform in these different environments, right? Remember prior to 2017, 18, it was, it hasn't been in an environment where, the world collapsed. Well, we got that shortly after. Still here, right? Miners in China go offline. Still here. Right? Rising rate environment. We'll see. Right? It's benefited from rates going to the floor, right? Just like every other asset. So we'll see what it does in a rising rate environment. But I think if I were to make a bet, it's an asset that I would want to hold, right? Through all environments, but especially the one that is coming up.
Oh, yeah. So basically what you're saying is Bitcoin is bulletproof. So stop worrying. I don't want to say that like it's definitive, but you're right. Absolutely. Bitcoin has been through the wars. It's seen all of the things that could supposedly take it out, and it's pushed through it. So it's great to see, great to have some hope that even in the face of some of these monetary policies, you do have something to hold on to. And I want to get your take on Bitcoin and cryptocurrency. Do you prefer, or do you tell clients to self-custody, or do you prefer them to put it into a retirement vehicle that your company may use?
That's a great question. So we just provide the tech for advisors. That's up to them. I personally had, and again, I'm a bad proxy. My clients were way in the future. They self-custody. Some had assets at exchanges, but I think that depends on the individual. There's no right way to do this. A CASA may make sense. An Unchained may make sense. A Coinbase may make sense. But if you look at Coinbase, Cash App, all these folks are building self-custody solutions. You know why? Because that's the future, right? Decentralized custody, decentralized finance, decentralized exchanges. It's all going to be decentralized. Self-custody is going to become a thing. But right now, the UI, the UX, the usability is a little janky. When it gets better, that will grow. But I think that depends on the individual, how far you want to go with multi-signature if you want that type of custody. Simple usability. All right, I'll buy it at PayPal. I just want to own it. I don't care about taking it off or whatever. That's the beauty of the crypto markets. There's something for everybody.
Yeah. And freedom. That's what I hear when you say that. Freedom. It's your choice. 100%. You can do what you want. You can self-custody, or you can put it in a third party. So that is what true freedom looks like. And I love that you brought that up. I also wanted to ask, in the Twitter world, Instagram, social media world, it's a great tool to spread knowledge about Bitcoin and about cryptocurrency. We both use it ourselves. But unfortunately, a lot of boomers don't use social media as actively as we do. What are some ways that we can get this message out to them, even in the face of them not using social media so much?
Family gatherings that are coming up. What needs to happen is, again, you reach mass acceptance before you reach mass adoption. We are at the mass acceptance stage. So I've written articles for Morningstar, the traditional media where boomers get a lot of their information. It's going to have to permeate there. So your Wall Street Journals, your Barrons, your Morningstars at conferences that I'm about to go to, not, Miami Bitcoin meetups and not consensus. It's going to have to be at Excel. It's going to have to be at Riskalyze. It's going to have to be at the largest advisor conferences in the world, because that's where they are. Also, it has to make it into retirement account, 401k advisors, into that world. When you do that, then you cross over, because I think you got $13 trillion or so of retirement assets. That's when you really start to cross over and reach that audience.
Oh, yeah. So, we have Thanksgiving coming up. We got Christmas coming up. So anytime you're gathering with some of your family and friends, you try and get that message to them, because, again, looking at the older people in my family, they don't have any social media, maybe a Facebook, but they don't check it. So to us, we kind of live in this bubble where we feel like this information is freely given out all over the place. And to them, they're like, I don't see it anywhere. So I definitely understand that having to go to some of the central places, some of the old financial market type conferences are great. So one thing I wanted to ask too is, recently, according to a report from CNBC, Social Security is set to be drastically reduced by the year 2034. And for people my age, that basically means that there's going to be no Social Security for me when I retire. So would you suggest that for younger people, and maybe even some of the older people who are getting close to retirement, is crypto a better alternative, or is that something viable?
It is viable. I think there's so many personal finance and planning things that are probably more important. So I wouldn't say Bitcoin or crypto is the best option, but it is an option that everyone should consider for sure. But there are a lot of planning things that need to happen along the way. And I want to make this very clear. Bitcoin is a crypto asset. The crypto asset market, and any asset should be a part of a plan, which then should be a part of an estate plan, which then should be a part of my personal finance plan and my savings plan and my tax plan. These are all part of the strategies of how you get there. If you're wealthy enough, you won't need Social Security. You shouldn't care, right? And when I say wealthy, I don't mean 10 billion. I mean wealthy in terms of your knowledge to be able to plan around your personal financial situation, so you're not reliant upon that. So we have a responsibility to educate those that will be relying upon that, and let them know that Bitcoin is an option. But if you plan appropriately, then you're not dependent on that anyway.
Yep. Yeah. And those fears, a lot of times, they only come without planning. So like you just stated, if you have a plan in place, if you know what you can do retirement wise, you won't need Social Security. But I do know a lot of people that are concerned that, hey, man, I'm putting all this money in the Social Security fund and I won't see it when I get older. Forget all that. I want to put it into crypto. So both sides of that is definitely there. And I would love to get your opinion on the fact that a lot of boomers who I've talked to, they are big gold and silver bugs. And to them, that is the best way to store your value. Like you stated earlier, I would like for you to say, in your opinion, to those who hold a large amount of gold and silver, Do you think that they should transfer into the digital age, or do you think that is a great way to still store your wealth long term besides Bitcoin and cryptocurrency?
I think, again, and I got to go back to my Wirehouse days. One of the gentlemen there I met, one of the smartest gentlemen in the world. He was a big silver bug, a big gold bug, and he put it in every financial plan. I think that you can hold Bitcoin and gold. I don't think it has to be one or the other. I think if you are younger, you should own some precious metals, but you should own more Bitcoin. I think if you have conviction on Bitcoin and crypto, then have the majority there, but having some precious metals makes some sense. But you look at, I think, what is it? The gold market is 11 trillion or something. If you look at all of just the capital markets overall and all of the assets, it wasn't, there's a lot of assets and a lot of asset managers that don't allocate to gold, right? So it's always been this thing where there's gold bugs and people are like, well, it just sits there, right? Like Warren Buffett is just a pet rock, right? It doesn't produce anything. So I think you can own Bitcoin alongside gold. It's not one or the other, but if I had to choose, choosing Bitcoin, right? And I only own the precious metals that I have. That same gentleman gave me some silver. It was like, buy some silver, but everything goes into Bitcoin.
Oh, yeah. Yeah. And I would say, I myself, I own gold on silver, small amount. Some of it was gifted to me, but of course, mostly Bitcoin because I see where we're going. And, Peter Schiff is one of the biggest, proponents of gold and saving in gold. What would you say to somebody like Peter Schiff, some of the older monetary policy people that still push this narrative? Do you think it's good for the Bitcoin industry, or do you think it's bad that they're trying to sway some of the boomer investors away from Bitcoin?
I think it's great because the minute they keep pounding that drum, they make really good arguments for Bitcoin, right? You can just insert the proper things to say with Bitcoin. So Peter Schiff makes some good points. He's smart, right? He's been around a long time, but there's a lot of things where you just go, all right. You can fill in Bitcoin there and you can make better arguments around that. But they continue to pound the drum, do it. Right? Yeah, absolutely. He absolutely should. They should continue to do that. But at some point, Bitcoin needs a longer track record. That's what folks don't talk about here. Again, it's 13. With a longer track record, it'll be easy over the next 25 years to look at it. And again, gold's been around for eons, right? And go, all right, now we have a longer track record. Look, right? Like you can do that now, but over a longer time frame, which a lot of those folks care about, it makes it easy to dismantle that argument.
Oh, man, definitely. And I think one of the best ways to dismantle it is using Peter Schiff's own son, Spencer Schiff. I remember there was an article about how gold was actually down 2% over the 10-year mark. And Spencer Schiff, his son, decided to buy Bitcoin at 18, and he was up, I believe, over 700%. So when you see those numbers, it sort of sways you a bit like, oh, this must be a different time. So I think a lot of people need to realize it is a different time, digital age, definitely. And I wanted to end here. Could you, for the crowd listening, for any boomers who are listening, could you give us 3 actionable steps that they can take as soon as they finish watching this show to get into Bitcoin if they have, any reservations about it? What are 3 actionable steps they can take to get into Bitcoin and cryptocurrency?
1, we all know boomers like to read. So download the Bitcoin white paper and read it and get as far as you can. There is something in there that you won't be able to dismiss. Second thing, pick up the book Crypto Assets by Chris Berniski and Jack Tater. Read that. That is going to be the intelligent investor of the crypto space. Mark my words. I've been saying that for a long time. Lastly, ask questions of a fellow crypto hippie in the family. Myself, you, others, find a crypto hippie and come with really good questions. They will have really good answers for you. And once you do those 3 things, it'll be easy for you to take the next step of buying it because you can buy it anywhere right now. That's the easy part. The 3 things before that is the hardest part.
Absolutely. And I want to thank you again for coming on the show today, Tyrone. Thank you so much for your insight and for coming on and talking to us about Bitcoin for boomers and cryptocurrency for retirement. Thank you again, brother.
Absolutely. I can't let you go without saying I appreciate you, King, and how you were, trying to elevate our community and keep pushing us forward with your book and all of the things that you do. I admire you. I support you. I look forward to meeting you in person soon. I appreciate you.
Absolutely. Likewise, brother.
Be well.
And that's it for this episode of Community Crypto. I'm your host, Isaiah Jackson, and every week we're building a global community with local crypto groups. So be sure to tune in every Thursday at 4 p.m. Eastern on CoinDesk TV. See you then.